Last time our next guest was on, he presented a bullish case for gold, saying that its real value should lie somewhere around 2,000. So could gold be headed towards that in 2017? Joining us now in studio is Bloomberg's head of metals and mining, Ken Hoffman. Ken, welcome back.
Thanks for having me. Crazy times, right?
Crazy times indeed. And as we're about to start 2017, we have the Dow closing in on 20,000. We have a rising interest rate environment, strong dollar. Is gold up against a brick wall here, Ken?
Well, everything you would have thought maybe in the summer. What could go wrong this year? It was Brexit, and for many traders, it was Trump. And those things came true, and what does gold do? It goes down, which doesn't make sense on the face of it, but it almost seems as if the market wants to see all the positive. The positive, what they're saying is Trump's going to put in $100 billion a year in infrastructure, he's going to cut taxes, U.S. economy is going to explode, and the dollar, which is gold's arch nemesis, has been rising, and so that's hurting a lot of the commodity complex. But I think when people stand back and start to look at things, number one, the Trump infrastructure plan is not that big at the end of the day. Remember, Obama put in a $60 billion a year infrastructure build, which runs out in a couple of years. Trump's is $100 billion, so it's a little bit of an increase over that. Net, not a big deal. Taxes, he's got to get that through Congress, and I think that will become very apparent when he gets in next year, that a lot of Congress don't want to raise the U.S. deficit. And we have Brexit negotiations, which have seemed like they're getting sort of rocky. So at the end of the day, gold is that safe haven. If anything, it's probably more than $2,000 on an apples-to-apples basis when you look at the M2 money supply growth. It's more than 8% a year in the U.S. In China, it's over 11.5% a year. There's a lot of stuff going. China has just tried to ban some of the gold imports. There's a lot of things going on in the marketplace right now. And I think traders are looking at technical levels and they're looking at the dollar. They're very short-term focused. But I think if you look at a very long period of time, there's quite a few good things that have been going on in gold and I think continue to go on in gold.
But what about the demand side, Ken? Despite the dips and especially today's dip, we're not seeing that demand pick up in countries such as China and India, the largest consumers of the metal.
Well, you actually have seen quite a bit of pickup in China, actually. Even despite the quasi-ban they put out there, you have seen a lot of the retailers go online saying sales are up 40% in December over last year. So there have been signs where there are bargain buyers into the marketplace. So I wouldn't be too worried about that. And longer term, again, gold is up against other currencies. If gold is rising at 1 or 2% a year in its amount that's above ground, and the currency is rising at 10, 12, 15%, there is a law of gravity that says at the end of the day, gold has to be valued versus that piece of paper. And sooner or later, that's going to be a positive. Now, could it happen all at once in a very quick motion, or will it have over a long period of time? We don't know. But we do know there is a correlation with how much dollars or yen or euros are out there versus how much gold, and they all tend to come together over a long period of time.
What about the mining equation and factor? What are you seeing here on the production front?
You're going to see less gold. For example, just yesterday, Newmont came out and said their giant Yanacocha mine, which is a an ounce a year mine, is going to be depleted. It's going to be out. That's a million ounces of gold less a year. And remember, none of these guys have invested over the past few years in the downturn. So you've seen operating costs rise. They sort of bottomed out about 4 or 5 quarters ago. They've been rising ever since. If the price of gold drops much below 1,100, you will see more capacity closures. So the miners that really kept working on lowering their costs, like a Barrick and a couple of these other companies out there, they seem to be pretty good. But some of these miners are still $1,100, $1,200 all-in sustaining cash costs. They're going to have to start shutting down. So the supply side looks like it's only going to get tighter. There's probably not much to help them probably for 4 or 5 years because they just haven't been investing over the last downturn in the cycle.
So the bullish case still very much alive for you as we're about to start 2017. Before I let you leave, Ken, any resources that might surprise us in 2017 that you think we should be eyeing?
Rare earths. Rare earths are the cornerstone. It is if China and the U.S. get into a trade war, rare earths will be the way they will screw the world. And rare earths go in your cell phones, they go in cars, missiles, tanks, everything.
Batteries. Right.
Everything that you want is run with rare earths. The price has already started to move up 15, 20%. If China wants to send something over the bow to Trump to say, don't screw us on trade, he's going to go after rare earths. And those prices last time went up over 1,000%.
What about that rally that copper had immediately post-Trump? Do you think that was just a brief, or is also copper one to watch here?
Copper is looking interesting in that you're not going to see much new supply of copper come on next year. Now, you have seen all of a sudden, last 4 days, a huge amount of copper come into inventories. There's a lot of copper floating out there, so you have to be careful with copper. The good news in copper, there isn't much new supply. The bad news is there's huge amounts of inventory of copper out there. We just don't know when they're going to come into the market. So it's going to be a really tricky call for copper.
Ken, it's always great speaking with you. Thanks so much for joining us in studio.
Thanks for having me.
And thanks for watching our continued coverage of our Outlook series. We'll have much more for you, so be sure to stay tuned to Kitco.com.